Good morning. We have arrived to the last Monday of 2025. There's going to be a lot of last as we approach the new year, which is going to be upon us on Wednesday night, Thursday morning, when we say hello to 2026. We ring in the new year and reset all our performance indicators. Everybody's back to even at the stroke of midnight on Wednesday night. But for now, we're going to focus on how are we going to finish this year. This year has been a good one, 2025. It's had its ups and downs. If you recall, in the late spring, we had that big sell off, but then the market picked itself up, led by individual investors who said, "Hey, are you kidding me? You're going to sell me stocks at those discounts? I will buy them up." And we rallied higher. Right now, we're sitting on the S&P going up 17.82%. And I was mentioning to Daryl, how you doing this morning, Daryl?
Doing wonderful, Victor. Good to be
Ex-
here.
And I was mentioning to Daryl that if we finish above 20% performance for the S&P, it'll only be the second time ever that we've had 3 consecutive years of the S&P going up 20% or higher on 3 consecutive years. That's only the second time ever. And it shows that we are in a real great, looking at the rear view mirror, the last 3 years have been excellent. If you're an individual investor and started to really learn, take over your financial future by investing and just getting better at it, and you could still use ETFs. You could still use, advisors. But if you can get better informed, you kind of separate the noise from real signals and real facts. And the facts are this year, especially individual investors, retail investors have outperformed the institutional investors, the smart people on Wall Street that charge a lot of fees. We've outperformed them, and I'm not out to like show that hey those guys are all bad because there's a lot of good ones, but I'm out to kind of just convey that I'm an educated guy. I've got a master's in business, accounting, finance have always been something that I've really enjoyed, and even with that type of background, I depended on some advisors for a long time and really felt that I just wasn't my portfolio wasn't growing fast enough. And about 15, 17 years ago, I really just took everything over because it just seemed like the advice I was getting was advice that would kind of preserve their credibility. And we weren't taking enough risks. I was paying an advisor to get me into ETFs and mutual funds. And I'm like, wait a second, that's that's like I'm paying two groups. I'm paying the advisor, and then I'm paying an ETF manager or a mutual fund manager. So I just thought, I could probably do better, and it ended up being a really good decision. I manage my own real estate, I manage my own stocks, and it's been a really good thing because now I'm that much more knowledgeable and I'm able to understand the markets better. I still make mistakes. I learn from those mistakes and I get better. And I have some successes and I learn from those successes. So it's been a really good year. And how's your year gone, Daryl?
It's doing pretty well. And a couple of accounts, I'm far exceeding the S&P 500, and then the other one just trailing it slightly. But they've all done pretty well this year, considering I have to live out of one of them
There
since
we
I
go.
am retired.
Yeah. So glad to hear that. And, if we look at 2022 was the last down year for the S&P. Even when we mix that into the 5-year return, the S&P is up 84.5%. That's phenomenal. Now in 2022, we had a midterm election. We had, I think, interest rates were a big giant problem. Interest rates is that the year when the Fed raised them really fast, kind
Yeah, I
of
think
broke a couple
that.
banks.
Yeah, I think that's when they were talking about raising them, and really started peaked out in 2023, if I remember correctly. I'd have to go look at the Fed rate chart and
Yeah.
see
I
what I
remember
see.
Silicon Valley Bank, there was a run on that bank and they
Yeah,
do no longer exist. Their assets were sold off to another bank. I forgot which one acquired them, but that was because they were holding long-term bonds. And when interest rates go up, those bond price or the value of those bonds goes down because the interest rates went up substantially, really fast. They had to restate that on their balance sheet, and it really concerned um, account holders who were like, "Whoa, what do you mean you're taking all those losses?" And that really scared the market. And Silicon Valley Bank was kind of a sacrificial lamb, so to speak, because the government immediately realized, "Uh-oh, we're kind of breaking the banking system." So they backstopped the existing banks, saying, "Hey, nobody's going to be left without their reserves." And then that stopped the run on banks, especially those smaller regional banks. And that was kind of the last bad year. Now, I'm not a fortune teller. I don't know what's going to happen exactly in 2026, but I'm not going to operate just looking at the rearview mirror. I'm looking at 2026, and I do see that there's a lot of reasons why the market can continue to work. We could continue to see stocks go up in price. Not all stocks, and it's not like, everybody gets a participation award. No, it's certain stocks are set up to probably do well next year. Might be some of those stocks that didn't do all that great for the last couple years, especially last year. And they're beginning to work, and they're probably going to work into 2026. Maybe some sectors that are not super expensive, those should work. So it's my job to figure out, okay, how could I rotate into stocks that are going to work? And I think it's super fun. It's the ultimate chess match, and it's the ultimate. I consider like my portfolio in a way as a big garden, a garden of things that I get to plant, and I bear the fruit of that garden. And, in this case here, looking at 2026, I do have a string of new stocks that I'm buying into that I think are gonna be good ones for 2026. And, we're here to cover some stocks. We're here to cover some questions that you guys have. If you do have a stock you'd like us to look at, put it in the chat. Members can request stocks to be reviewed. It's just part of your membership. And if you're not a member, no big deal. You can buy a $5 super chat and we will review that stock. Or if you have a question, pop the question in the chat. We'll try to address that question. Whether you are a young investor or a middle-aged investor or an older investor, we cater to all groups. And just ask whatever question that you would like to ask, and we will try to cover it. We got plenty of time this morning. It's going to be a low volume week again, right? We're not expecting any high volumes this week. All right. So
you were correct, Victor. They started in April of 2022 and went all the way until August of 2023 is when they peaked out.
yeah, and that really broke. I mean, the way banks make money is net interest margin. They have people come to their bank, just keep it super simple. Businesses, they say, "Hey, we got deposits." Great. So let's say a big business deposited $1 million. Well, they might pay at that time, I don't know, they're paying 2%, 3%, and they would buy long-term bonds and they would look for a yield of 5%. And these are good, solid, bonds. But as interest rates go up, those bond prices go down. And generally, accounting principles state that you need to restate assets on your balance sheet to the lower of cost or market. So if the market value of your bonds went down, you have to restate it and you take a loss in your income statement. That process is what concerned depositors, and they were like, "Uh-oh, this bank's losing money. Are they going to go bankrupt?" Well, I don't want them to go bankrupt with my money in the bank. And boom, they had a run on Silicon Valley Bank, and it started to create a real bad kind of forest fire, so to speak. So the Federal Reserve, to put out that fire, they backstopped all banks, said, "Hey, nobody's going to lose any money. So everybody, remove your concerns for now." Good morning, Peyton. How are you, sir? Good to see you. Great to see you. All right. So we are talking stocks this morning. Let me get back to my screen here. And if you haven't put in a stock pick, we're running a contest here on the channel for the 2026 year. And the contest is pick a stock you think is going to go up at the highest percentage in 2026. And if you are correct, of course, at the end of the year, think of the pride and that you could have as, hey, you picked the best stock. Good for you. We also have a couple prizes out there. At the end of the first quarter, we're going to track it for the full year, but from January 1st until the end of March, whichever participant comes in first place, percentage gain, U.S. traded stocks. I can't go around the world, and that just makes my life that much harder. That person's going to get a free subscription to Stock Analysis. In the winner of the second quarter, which is going to be measured at the beginning of the quarter, April 1st through the end of June, they'll receive a prize, and then so forth. And then at the end of the year, that person, whoever picked the full year, will think of a prize. Maybe we'll have two prizes. Whoever won the quarter, and then whoever won the year. And I'll update this list each month to see which stocks, performing the best and maybe not performing all that great. Now, what I did is I took the long list and put 2025 year-to-date performance just to see what kind of stocks we're dealing with. And we're dealing with some really interesting ones. Let me sort this list. Look at this. ALM up 958%. That's a pretty good rate of appreciation. That's a great rate of appreciation. ALM. And these guys are a miner of tungsten. How is tungsten used? Do you happen to know that? I think it's in like technology devices, right?
That's a good question. I haven't given that any thought.
So, well, let me ask Gemini. Gemini seems to know everything. All right, Gemini. With that question, let's see here. So, cutting tools, machinery. I guess it's a very hard, durable. It's like tungsten carbide. Oh, okay, that makes sense.
Yeah.
Aerospace and defense. That makes sense. It's very dense. It's heat resistant. So it's used in rocket engine nozzles. Okay. Electronics and semiconductors. Okay. And automotive. Turbochargers. They have tungsten. Braking systems. All right. Green energy. Okay. So it's a product, or I should say it's a material that is used in some industries that are doing really well. Aerospace and defense is experiencing good growth. Of course, semiconductors, awesome growth. The manufacturing, I can't say that it's booming, but these guys are selling a lot of tungsten out there. So that's what Almonte does. And these guys, man, incredible rate of appreciation, 957%. And they are a small cap, 2.47 billion. really small revenues, but I think their forecast kind of tells us that these guys are going to grow. You see the growth in 25 is good at 78%, but next year, look out, 228% rate of growth. They're going to go from 51 to 169. They probably have a mine that is going to go operational, and that mine is expected to be quite good. Like, hey, we're going to extract a lot of tungsten, and we're going to get that to market. We're going to make lots of money, and it's going to keep growing. 2027 continue to grow. 2028. So that growth looks fantastic. That's why I focus so much on that revenue line. That revenue line shows you, hey, these guys are going to make it happen. And the market's just super in love with this stock. Almost 1,000 rate of appreciation in 1 year. Can they do that again in 2026? Well, if they do, Genetic Smite is going to look real smart. I know he's already smart. He's just going to look smarter. And then next stock, IREN. IREN, I think, is a data center company. Let's take a look at IREN. 300% rate of appreciation. No, 241, excuse me. And this is still kind of a small cap, 13.2 billion. Revenues are pretty good, 688. Forward P looks expensive. And these guys operate vertically integrated data centers in Australia and Canada. It also mines Bitcoin. A lot of the Bitcoin miners kind of made their bones mining for Bitcoin, operating GPUs, getting very good at running GPUs. And now that the AI market needs GPU infrastructure, they're like, hey, we know how to do that. And hey, we get to make lots of money doing that. Let's do it. Let's switch over or diversify. Diversify by being a Bitcoin miner, but also providing cloud infrastructure, high performance data center services. And that's what they're doing. They are flourishing. Now, these guys did sell off for a while when everybody thought they're just a Bitcoin miner. But once the market realized, well, everybody's going to be really, really interested in data center companies that support AI, this stock really took off from $5.63 up to above $60. Over the last month, it's been under some pressure because there is some concerns that maybe they're not going to need all this data center capacity, and there will be some stocks that will be punished. There'll be some businesses that don't do well and potentially go bankrupt, because this business here, it's as good as how many customers want to come and use their capacity, because they're supposed to grow quite well. This is the year we're operating in. They're growing at 138%. Next year, they're going to grow at 122. Their fiscal year ends June 30th, so right in the middle of the calendar year. And these guys are going to be growing really, really well. So the market does really like that. That's why the stock's up so much. And if they continue to grow and the forecast for AI continues to kind of get a refresh of enthusiasm, this thing's going to continue to flourish. If we get the opposite, where there's a refresh of concerns like, hey, we don't think we're going to need all that AI capacity. We don't think AI is working. It's under some pressure today, by the way. It's down 4%. I would have guessed that they'd be up because there's news that SoftBank is acquiring a cloud infrastructure company. So that's one of the picks that was put out there. The 1 year 241, and looks like Trev Byrne trying to make that happen. And that's weird. When I have Google look up the price. Oh, I'm sorry. I think I looked at the wrong rate of appreciation. Here we go. Okay. The planets have aligned on that one. I was looking at the wrong one. Year to date, 310% rate of appreciation. Phenomenal. Then Juicy, Nebius is the same as IREN, or same industry. I think Nebius is over in the Netherlands doing the same thing and having the same kind of performance. Dave is a new generation financial services company. doing quite well, growing really, really well. Now, this stock flourished, but it's kind of consolidated for 6 months, 7 months or so. And it's having a hard time going higher. And I think it's because the forecast, past the forecast. Here we go. So we are in a year where it's growing really well, but next year it's going to slow down, or I should say the growth isn't going to be as fantastic. Growing at 56% is really fantastic, but then we're going down to 18, then 14. So I think the market's looking at it going, okay, this is a small business. Its growth isn't going to be as fantastic. So maybe we slow down our investing in this particular stock. The earnings per share is also not going to grow next year, which might be a little bit of a concern. It's bringing down its PE the ratio to a really good number, by the way. So this one here most definitely can continue to just perform really well if they surprise to the upside on their earnings. The next earnings is going to be early February. So if they come in and say, hey, we're going to grow faster than we thought, this stock's going to, just hockey stick higher because it's a small cap. It has a good business. I think they have a good business idea, and we'll see how they do. It's a good pick. This one here is a small cap. It could really move higher. So Braden, good luck. Then Mike, the dividend investor guy, he's already made some money, I think, on the Fubo merger. They're going to be acquired. I think Disney's going to acquire them. And the stock's kind of faded. It's faded, but if that acquisition gets done, there's no way but the stock going higher. So good luck to Mike on that one. And then we've got a bunch of other picks out there. Now let's look at the opposite end of this. And the opposite end, we've got some stocks that investors are thinking these guys are going to come back. Look out. These guys are really priced lower. And if the market realizes these are good stocks, it's going to go higher. The trade desk has been under pressure. I think a big part of it is that AppLovin is the leader in this space. These guys, their growth has slowed down. It's really caused some big sell-offs in this stock. Holy smokes, look at that. And this one could be setting up to do well. Now, it's important that they announce earnings and they say, we're growing faster than you thought, stock market. If they say that, this stock's going to work. But for right now, it's not looking like it's going to work anytime soon. But hey, 2026 is 12 months. It's a lot of time. If they can announce, 3 earnings reports that are higher than what's expected, this stock could really work. So it's going to grow nicely, 16% in 2026, 15.8, 15.5. That's good growth. But if they can surprise to the upside, this one can totally work. And the fundamentals look good, like low PE ratio. So that's a solid pick. I'm thinking that one's got a pretty good shot. And then we've got Paul going after gambling.com. That's a depressed stock, but it continues to grow really well. Really nice high growth, profitability, everything's there. But I think the whole gambling space has been kind of beat up because the prediction markets are supposed to take a good part of the market share. So stocks like gambling.com, DraftKings, and so forth, they're being sold off. Kind of the whole lot's kind of like, well, we don't know what's going to happen, so let's sell them off. Then Peter is going after strategy, and this is all based on Bitcoin. Bitcoin it's sold off from its high. Its high, it was like $124,000 per coin, but now it's trading at high 80s, like 88,000. So that decline strategy really takes hard because what they're doing is they're using leverage. They're using leverage to buy Bitcoins. And when you use leverage, the ups and downs of Bitcoin are going to be more exaggerated. If Bitcoin goes up, strategy goes up higher than what that Bitcoin is going, but the opposite, if it goes down, then the losses are exaggerated. Boom, you lost more. Now these guys are supposed to grow a little bit. Now they're harvesting some kind of income out of it, but It's a real big bet on Bitcoin. Basically, if Bitcoin goes up, these guys look like geniuses. If it goes down, then you take big losses. And these guys have been taking big losses. So looking at the 1 year, 55. Oh man. But for a while, when Bitcoin was working, boy, this looked like such a genius move, right? And this was probably around the time when Bitcoin was really rocking, but now it's not. So will Bitcoin rise? I don't know. I don't know. That one's a tough one to predict. So that's what's happening with the contest. Everybody, thanks for sending in your picks. What did you pick?
I picked OKE. I was asked about that on Friday, and basically my reason for the pick was just a reversal. And
Mhm.
today I see a question for you about picking Oxy, so you can share why you chose Oxy.
Sure, sure. So OKE, these guys midstream play. It's funny that you and I kind of went into the energy complex. So over the 1 year, it's kind of beat up a bit, but look at that nice rise. So if they can repeat this period here, Daryl might be near the top. He might be on the podium this year. Good luck, sir. Now the question was, and why did I pick Oxy? Well, I wanted to take a swing, right? It's kind of like swing for the fences. Maybe I'm going to strike out. There's definitely a pretty good chance of striking out. But similar to like the sold off stocks, Oxy's down. And over the 5 year, this is what I'm thinking. If this happens, if there's like an oil shock somehow triggered, maybe Venezuela, the US are kind of, bickering at one another. And if that escalates and you have a disruption to oil, and oil goes from, I think it's a little less than $60 per barrel right now, but let's say it popped up to 85 in short time, Oxy is going to be up 100%, 150%, because they're a pure play oil exploration company. It's a good one. Warren Buffett owns the stock. I own the stock. I think highly of the stock. It's just risky. And you see that it's been declining as oil prices have declined. And if oil works, if oil goes up higher, I'm going to be sitting pretty with my pick. If oil does nothing like it did in 25 and 24, then I'm probably just going to be watching. I'll be covering all you awesome investors that picked other stocks that look super interesting. So that was the reasoning behind my Oxy pick. And that's where we're at. So we got a lot of people that pick stocks. Awesome. And what I'll do is I'll set obviously like the year to date. This will start tracking after January 1st. And then we'll take a peek at it on live streams, but I'll fully do a video at the end of January, at the end of February, at the end of March, especially, and then kind of announce the winner at the end of March. So it'll be fun to do. And special thanks to, I think it was Tomas B, who thought of this idea. I really appreciate the idea. I think it'll be fun. So that is the contest we've got going. Market, I think, just opened. How did it open? Oh, man. NVIDIA's down, under pressure. Why is it under pressure? Google's under pressure. Meta's, man, we got a lot of stocks under pressure here. What's working today? Energy. Oil prices, I did take a look earlier, and oil prices were up about 2%. So that's helping the energy complex. Materials are up, gold is up, copper's up. There is a stock I would love for you to look at again. I asked you about it in the past, but BHP. I'd like to look at BHP if you wouldn't mind, sir, because I've been just kind of kicking around the idea, should I buy BHP? Should I buy BHP? And I'd like to get your thoughts on that.
Okay.
So consumer staples working a little bit, but I don't see any particular theme just yet, but hey, we've been open for about a minute, maybe two. We'll give this thing kind of a little bit of time to figure itself out. In the meantime, let me check in on the chat. Looks like Shadow Guy is on. If I may add something, I agree. And don't get overconfident with the market. Totally. I get that. And always understand that we're learning every day, sometimes from our mistakes, sometimes we pay for lessons. But I would also say, don't get overconfident. And I like what Daryl said. I think when we started to stream together, he made it a point to say, hey, I don't get too discouraged. It's just a waste of energy. It's a waste of emotion. I thought that was really good advice that he accidentally gave me without knowing. I think that's really important. I know I'm going to make mistakes, but what's important is don't get into like, oh, well, I should have known better and all that. No. Okay. What's the mistake? How could I learn from it? How could I get better? And on successes, be humble. Okay. I got that one right. What did I do right? So just constantly be learning and getting better and be humble. And things I think over time, like 20 years, you're going to do great if you follow that type of approach. Okay, so we got that handled. And
that's a lot of red, man.
Oh, no. Well, I'm going to go back to bed. The Shadow Guy, I think he kind of agrees. Always something more to learn. Absolutely. Even the great Warren Buffett, he's in his 90s. He's awesome. Nobody's going to argue that point. He makes a stock pick that is like, didn't work out. And he makes some stock picks that are genius. Peyton. Okay, we went over Peyton's question. Great to see you, Peyton. Ben 10. You want to look at DVA. We're going to look at DVA. Not familiar with that symbol. Good to see you, Ben 10. And then, yeah, Nebius is a good pick. And, Nebius is either going to be, it's like, I'm a fan of Talladega Nights, the movie. And the main character, his name was Ricky Bobby. And he would say, second place is the first loser. So he's aiming to win, right? So if you pick like Nebius or one of these like long shots, you're either going to be in first place or last place, but you're not going to be like, hey, I was right in the middle. I was kind of toward the front of the pack. And Nebius is going to be that type of pick. You want to look at KSPI. Yeah. I'm not familiar with that one either. Shadow Guys. Doubling down on KSPI. So we'll take a look at that one. All right. So stock market's a little red. Man, it's a lot red. But we're starting to see some green fill in here. This is just one day, but maybe the rotation is upon us. Maybe investors are saying, hey, there's some good stuff in consumer staples, utilities, real estate, energy, healthcare, industrials, financials. Financials tend to win because, in most markets, because if all the financing needs are in industrials and healthcare, they make money. If these industries are booming, they make money. If technology is booming, they make money because they need financing partners. They need companies to handle the transactions and so forth. So not a bad idea for 2026. All right, we'll put that off to the side for a few minutes and begin to get into some stocks. Man, the chat is on fire. Looks like this user, KHD, I don't think I'm not going to go over the letters, but what do you think of CDNS? I haven't heard of that symbol. Are you familiar with CDNS?
Sounds familiar, but I can't recall what it is.
Okay, no worries. I think that's a San Diego hat. Maybe this guy's in San Diego and supports the Padres. If you want me to look at that stock, happy to do it. $5 super chat, and we will handle that. We will go over it. We'll do an analysis, maybe a valuation and everything. Magical Self. What's my valuation on ADI? Would you hold it for 2026 if you would have it? Okay, let's take a look. Magical Self, ADI. It's on the list. Man, the list has grown. We've got 7 stocks on the list. We're going to go over eToro, Genmab, Alibaba, BHP, DVA, KSPI, ADI. And for all I know, though, this is going to grow because you guys woke up. You guys are in the mood to talk about some stocks, and so am I. All right, so it's getting a little better. It's getting a little better, Daryl. Meta's coming back a little bit. So is Google. NVIDIA's still a little red. All right, we'll let this thing kind of chill out. See if it just needs to go calm itself down. eToro is up this morning. This one hasn't been a total winner. It's been a stock, that I started to cover. It's a little bit soon after it IPO'd. It IPO'd in May, and it's been selling off. Now, a lot of good businesses sell off after IPOs, and this one here is a good business when you look at their fundamentals. Forward P is 13.69. Analysts think it's highly discounted. This would be a good pick for the contest. Maybe I should switch to eToro. Maybe. But I'm going to stick to Oxy. All right. So this company here, when we look at the rear view mirror and say, okay, how have they been doing? And I'm glad stock analysis, by the way, they would always put trailing 12 months on the annual. And then they switched. You'd have to go here to see it. And I was like, oh, I didn't like that switch. But then they switched back. Maybe other people had the same feeling as I did. I really like this view because I look at the historical years and then the trailing 12 months. Beautiful. That's exactly what I want to see. So if anybody from Stock Analysis by chance is listening, good job. I should send them a message and say, hey, good job for putting back the trailing 12 months column. So looking at the rearview mirror, these guys have been growing. And you think about it, eToro provides the same services as Robinhood, Charles Schwab, and so forth. So when stocks are being traded, eToro makes money, principally in Europe. They also do crypto and other assets. So most definitely in 2025, trading has been pretty active. So these guys have been making money. And they turn a pretty good profit. They are a brokerage, so they're not going to make big margins like Meta or, let's say NVIDIA, but they make similar margins to their peers. And they do have a good cash flow, again, based comparing to their peers. So all those things look good. When we look at a forecast, analysts are really high on this stock. This year, they're supposed to see a little bit of a contraction. I don't think that's been the case. See, you had a really good booming Q3. Q4 is supposed to come in here. And then they're supposed to be under some pressure. So that's maybe what analysts in the market are looking at going, hey, going forward, this one's going to be under some duress. The growth isn't all that exciting, but really it's in eToro's hands. If they can grow faster than the market expects, this stock's going to boom. Their fundamentals look reasonable because their PE ratio is really low. And overall, I agree with the discounting. This is a discounted stock, but it doesn't matter. It's what's the market willing to do with eToro, which is why I'd like to turn it over to Daryl because he looks at the technicals of this stock in particular and kind of interprets what he's seeing.
Okay, so we don't have a whole lot of data to look at, but they did go public in May. Their IPO price shot up from, I guess they were priced at about 51, but they closed at 67. They did get as high as a $75.97 close on June the 9th, and from there it's been downhill. We don't even have enough data for a 200 day moving average yet. So we set a trend line connected to this price and connected to this price. And just a few moments ago, because we had looked at this probably a month or two ago. So I just extended these downtrend lines out. We can see that it came up and broke up. Well, let's look at where the lower trend line is set. It's set to this peak. So these two are connected there. And then we connected to this high that they saw in November. So then they came back and trailed underneath that trend line. They broke out above it. They broke out above the second one. Looks really, really good. And then all of a sudden it reversed and dropped down below both of them. And through a little bit of consolidation, it's basically trading above this lower downtrend line at the moment. So we have a 21 day that is crossed over or down under the 50 day. So that's not the correct order. You want the 21 day higher than the 50, higher than the 200. We don't have a 200 on this one. So we can only look at these two, but both of these are declining. The 50 day looks to be leveling out somewhat. The RSI, except for about 1 week, I guess that's more like a month after they open, they hit an RSI right around 70. And then for most of the remainder of the year, they could not break above 60. They finally did that around here, didn't get quite to overbought, and then broke down below 60, and then even broke down below the 40. So they were showing a lot of weakening momentum here. The PPO is in negative territory, and we have not had a bullish crossover, and looks like it could be a little while before we have one. Money flow is currently negative. So I'm expecting sideways action on this one to maybe a little bit lower.
Okay. What are you looking for that would signal it might be a good time to buy?
In my opinion, it would need to break out above both of these trend lines for at least a week, because here we saw it for 3 days. So it looked like it was going to break out above both of these trend lines, but it only lasted 3 days. So I'd like to see it get above that trend line and close at least through a Friday close above that trend line. I would step in at that point, and I would have a pretty tight stop loss on it in case my thesis was incorrect.
Okay. Thank you, sir. Looks good. So let's move on to the next stock. And the next stock is Genmab. Okay, so Genmab for the last month was kind of under some pressure, and then it picked up a nice rally. Today it's under pressure. It's kind of faded here. The 1 year looks terrific for this stock. It's really gone higher. And this stock, there's a lot of good news in the business. Market cap is $20.6 billion. Forward P is 23, and they are growing quite well. So that PE ratio isn't all that bad. When we look at the historic, really nice growth, and you see that it's picked up. The percentage is going higher, even though it's bigger. So that looks really good. That means they're picking up momentum, really growing their business faster than expected. So that looks terrific. And what's also terrific about this stock is its profitability. 94.36% gross margins, profit margins 41%. Those are like really, really good margins. Free cash flow margin is very good. So they're growing faster and they're making lots of money. This is a biotech company. So they create a cure, a treatment for a bad disease, and they get to sell it for a period of time under its patent that it owns. So it gets to naturally have a barrier of entry so competitors can't come in and just copy what they do. And they're going to continue to grow in 2026 by 16.5, 13, and then almost 17. They have a pipeline of new drugs coming into the picture. So this looks really terrific. I can understand the market really liking this stock, and it really bid up the stock. Now, what's it going to do from this point? Now, that's the big question, right? It's really been bid up. Will it continue to go higher? I think it's discounted because the fundamentals are terrific, but I've been kind of concerned because it's had kind of a sell-off period, and I'm not quite sure what it's going to do next. So, can you take a look at Genmab and see what you're seeing in the technicals, please?
Yeah, I covered this one yesterday in my video that I released. So I'll get the highlights of what I saw there. So here we're looking at 5 years worth of data. And they started on a downtrend back at the end of 2022. So we have one downtrend line that's connected to that point into this point and extends to here. This upper connects to this one, and this one's somewhat of a newer trend line, but it connected to those two tops. And Friday, I can't remember whether we closed above that. It was right at that trend line. And then we have a lower trend line that's connected to that same peak there and connected to the peak that we saw here. So this was brought to our attention in a live stream at the beginning of October. Right at the beginning of October. It would have been great if we had been notified of it back here, but we didn't. I started buying in actually here. My reasoning is it had broken out above this bottom trend line, this trend line, and it's come up and tested this one twice, and I think it's actually above that trend line at the moment. I can see Friday it closed above the 5-day moving average. It's quite a ways above its 21-day moving average. The 50-day is also moving higher. Today, we're trading below the 5-day, but it looks like there were sellers early in the morning, and buyers have come in and picked that back up. So they're supporting, based on the shape of this candle, they're supporting the stock at this price and driving it back higher. The RSI is sitting right around 60. We had gotten overbought back in September. We had a sell-off and came back up and got pretty close to 70 again. Got down to the 50 and not quite up to the 70 line on that next try there. The PPO, maybe I should go to the 1 year now. So I'm going to go to a different chart here. The PPO is positive, and it's in a bullish configuration with the 12 and 26-day difference higher than the 9-day moving average. And accumulation is pretty much at 52-week highs. So there is interest in this particular stock. This is a 1-year chart. I've got some different trend lines only looking at the point in August. So these are more short term. But we have this one upward rising trend line that it broke down below. We have this lower trend line, which it's actually trying to get above that at the moment. And we had this one other trend line here that would be somewhat support. But you'll notice that we have a cup with handle pattern here. So normally what I do on those is I take the price at the right rim of the cup, $32. I subtract the low price, that's $28. And then you just add that difference to the price at the right rim of the cup, which gives me a price target. And I'm starting to date when I make these calls. So this was 2 Fridays ago, and the target price is $36. So we'll continue to monitor that one and see if it can push up to $36 over time. One other chart we can look at quickly is this is weekly data, looking at 5 years. And the thing that I really like here is we have positive action in the long-term trends. We have positive action in the medium-term trends. We have positive action in the shorter-term trends. So this is, maybe a week or a couple of weeks to a month. This is more like a quarter, and this is more like a year. So it's looking very good at the moment in all 3 of these charts.
Perfect. Thank you, sir. Okay, so the chat is blowing up. Let's move into the first request that we're going to handle. Then we'll come back to Alibaba and BHP. Before I jump in there, I'm going to just kind of highlight. So we got a red market, not too bad. We got the S&P down 0.36%. And when we look at the heat map, the pressure is mainly NVIDIA, 2%. Tesla's down also quite a bit. Broadcom's down. So the big semiconductor players are down. Google and Meta are also down. So yeah, the big guys are seeing their stocks sold off, and investors are picking up stocks in real estate, utilities, staples, energy, some healthcare, a couple of financials. And look at that. I like seeing this. This has been a long time coming. On the member call we had yesterday, we went over this, and really good stuff's happening in this space. I'm glad to see that. I'm also glad to see that on a day when it's red in semiconductor and Google and Meta, which are giant stocks, that money is flowing into this little space, which shouldn't be called little because this is a really valuable space.
I think you need to share your screen.
Man, I do that too often. You guys should have seen it. So kind of just backtracking a little bit. I like seeing when semiconductor stocks are selling off. Some of these big players are selling off. The money flows into some stocks that I think are really well discounted. So glad to see that software is moving higher, as well as some of the spaces that the money is rotating into other sectors. Look at telecom. So this Monday, investors are a little bit risk off. They're buying into telecom, which is a safer industry. Staples, obviously very, very safe. Utilities safe. I don't know what real estate is. I don't know if it's a safe space. Visa, MasterCard, very safe. And Berkshire, I believe, is a safe stock. Investors are like, hey, in Warren Buffett, we trust, and they move their money there. Most definitely, healthcare is a safe sector because healthcare tends to work no matter what the economy's doing. So that's what we're faced with on this Monday, the last Monday of 2025. In a week's time, I think in a week's time, the market's going to be, there's going to be a lot of pent up energy. There's going to be like, boom, they're going to be releasing the Kraken from, in the stock market. And I think Next week, the first full week of January, I'm expecting volumes are going to pick up. It's going to be I think, an intense week because there's going to be a lot of rested investors. You'll be like, all right, let's do this. So let's look forward to it. Man, the chat is blowing up. Tomas wants to cover Target. I would love to cover Target because I'd love for Daryl to take a look at the charts. So I put that on the list, although the list is getting pretty long. We're moving to DVA, and then we'll just keep going down the list. But geez, I've got like 7 names, 8 names waiting. It's like a nice, good restaurant. There's a line coming out the door, but it's just kind of the best advertising a restaurant can have because it shows that, hey, people are willing to wait in line to, order food. So market cap, $8 billion. So this is DaVita. And I think DaVita does dialysis. Yeah, here it is. Kidney dialysis services. And they are a healthcare play. Take a peek at their website. So when somebody has kidney failure, that kind of thing, they can go in and have dialysis. So their blood is cleansed of basically our bodies. And you're going to realize that I'm not a life sciences guy. I'm a finance guy. So I'm going to oversimplify. Our bodies, create toxins, and our kidneys clear those toxins of our bodies. Well, when the kidneys aren't working, you can go to a dialysis center and boom, they help you. So this is a big need, especially for older people or people that are having trouble with their organs. And over the 1 year, not so good. Over the 5 year, not good. Didn't get the job done. Doesn't pay dividend. And what's happening? What's happening with the business? Is it growing? Is it contracting? It's a small cap. Revenues are above its actual market cap. And I'll try to explain why. So it is growing, by the way. Trailing 12 months growing by 5%, 5.5% growth in the last full year, which was 2024. And we're going to take a look at where is free cash flow. They have been cash flow positive. They're not growing at a whole lot. They're just they're not a growth company. So they're just going sideways a little bit on their performance. And gross margins. Now, they're providing a service, and they have to operate machines. They have to hire nurses and people that know what they're doing so that people get taken care of properly. I know I'm not freaked out about needles, but boy, I really appreciate when somebody does a good job when they're, taking blood or doing stuff with a needle. So you want to have qualified people, and that costs money. So it brings down your gross margins. They are profitable, solid profit, and the free cash flow margin is also solid. So these numbers look solid to me. We know this is kind of a good, safe stock. It's going to be a necessity no matter what. So now let's take a peek at the forecast. What are analysts thinking about DaVita? They think it's discounted. Now this one here, it's expected to grow. This growth looks good. This is a consistent player. Okay. It's not going to set any records, but it's looking pretty darn good to me, man. It's looking pretty darn good because the profitability is going to expand. This PE ratio is going to drop. And let me take a look at their balance sheet. Maybe there's trouble on the balance sheet. Maybe there isn't. But here we go. We got $12 billion of debt. Now, is that a problem? Debt to EBITDA above 3. So they do have a debt problem. Is it a big, giant problem? It's a problem. It's like if it went higher, it'd be a big problem. And they also have, so a combination of a business has debt, and if you're above 3 on debt to EBITDA, that means you have a lot of debt. If you're at 6, you have a lot of debt, like you're a junk bond if you ever issued a bond. But here you're kind of like, okay, you have a D grade in your class. D, I think, is barely passing. Like, okay, I don't know if it's a passing grade. I've been out of school too long, and you need to improve it. You need to improve to a C. If you had a 3, that'd be a C grade. Okay, you're just barely passing. If you had a 2, that'd be like a B, B minus. If you had a 1 or less, hey, that's an A. If you had 0, you have more cash and debt, you have an A plus. Good job. These guys need to improve their data, their balance sheet. Combined with, they don't make a lot of money. They have low margins. They have low gross margins. They have low profit margins. It's just the way their business is. So it's just going to take a long time to pay off that debt. So they got themselves into some debt. You think about their operation, they have to open centers around the country. They have to sign leases. They have to buy equipment. These dialysis machines, that cleanse the blood, those are expensive machines. They have to maintain those machines. Just the operating cost is high. So this one's a total pass for me. Just too much risk for a stock that could moderately return a decent rate of appreciation. It's just too much risk. If I'm going to take risk, I want to see some potential. I want to see some high revenue growth, some high margins. I think DaVita is a necessity. I think they're a very important part of the healthcare system, but I'm trying to invest my capital and have it grow. And this one here is not going to receive any of my capital. It would be a total pass. It'd be a sell for me. What do you think of DaVita?
I'm aware of this company, but I had never looked at their chart before. So I'm going to go out a bunch of years just to see if I can find a quiescent spot with the pricing that looks somewhat reasonable. I think this one does. So back in 2015, they tested this price 3 times. They tested it again in 2020. It traveled above it, came down and traded at that price once more. So this looks, from a quiescent point of view, looks like it's probably pretty reasonable. And over the last 5 years, they seem to have gotten a little more energy. I think Buffett owned this one at one time. He may still own it. But let's go down. What's that?
I'll check to see if Buffett still owns it.
Yeah, let me know if he may have started selling out. I can't remember.
Let me give him a call.
Yeah, there you go. Okay. So we'll just look at 1 year now. And the 200 days declining, the 50 days declining, the 21 days declining. And these are all in the wrong order. So that is not a good sign. And if we just drew a trend line, we'll look at where we can find a good trend line. There might be one there. So it came up and tested it again. Has not tested that level or that trend line level since July. So we'll save that there. We have this auto resistance line completely out of view there. The RSI is under the 40 line at the moment. They have struggled to get above 50 since July. I see 1 or 2 times where they popped up above 50, but this really has poor momentum. The PPO is in bearish territory. Looks like accumulation is at a 52-week low, and the money flow is negative at the moment. This one has got a lot of work to do.
Buffett owns his stock. He's been reducing his stake. So, yeah, so he's kind of stuck in a stock that has not been working. This is the type of stock that Warren Buffett would invest in. He invests in businesses he can get his head around. that seem to be really well priced. But this one's not working. I don't like the balance sheet. All right, so that is DVA. And here's the info on Warren Buffett's stake. He's reducing it, so we'll see what he does with this holding. All right, we covered DVA. Now let's move on to KSPI. KSPI. All right, so my memory is telling me this company, together with its subs, provides payments, marketplace, fintech solutions for consumers and merchants in Kazakhstan, Azerbaijan, Ukraine. It operates 3 segments: payments, marketplace, fintech. Okay. And take a peek at their website. So this is a payments platform. Now, another topic we covered on the member call yesterday was, why the heck isn't PayPal working? Things just been stuck in the mud. Is this stock working? It is not. So this one, along with PayPal, along with Block, and just about every stock in the payment space is seeing this kind of downward pressure. Just not a good scene. And what's interesting is PayPal specifically, and we're going to get into joint stock and see what their fundamentals look like. PayPal's fundamentals look pretty damn good. They're growing, not setting any records there, but they're growing and they're profitable and so forth. They have very good balance sheet and they have all the right fundamentals, but the market's just not buying it. So this one here is a $15 billion market cap company. Revenue 6.67. Forward P is so low, 6.16. And so is PayPal's forward P is super low. Analysts think, why the heck is this thing priced so low? It's discounted, 43% discount. When we look at the rear view mirror, this thing's been growing. Wow, real good growth. This is in the KZT currency, but that percentage tells the whole story. These guys are growing. They're getting themselves bigger and bigger and bigger. We look at their forecast. Analysts think it's really discounted. Let's see if their growth is going to continue in the future. And for sure this year, that's a really impressive number, 48% growth. But next year it's coming down. And then the year after that's coming down. If you become a slow grower and you're doing business in a region that doesn't get a ton of investment, I think this stock's going to be under pressure in the future. So that would be a concern with this one here. The profitability is fine. P ratio super low. Geez, how low can you go on this one? But this one's caught in the same, kind of zone as PayPal. And PayPal has just been a frustrating experience for this investor, because look at this thing. It sold off after COVID and never came back. All other stocks took off after a while. This one here, not so much. This one's just been bumping along the bottom, and it has really good fundamentals. Analysts think it's discounted, but when is this darn thing going to start to rally? I don't know, but maybe Daryl knows. So let me kick it over to him and see if he wants to go over KSPI and see what the trends are telling him.
Yeah, the 200-day is drawing a pretty good trend line for me, so I don't really have to draw one here. This one isn't too terribly old as a public company, but they got to their 200-day. They've been trading under it. They had 1 week where it got above the 200-day, traded below it. 1 day where they traded above the 200-day. And since that point, they're trading below it. So, once again, I would need to see it break out and hold for more than a week, since it has a history of not being able to do that for more than 1 week. That would be something that would make it a little more interesting to me. The 21-day and the 50-day are moving higher, and those are in the correct order. But they need to get above that 200-day to be in the proper order. They were over, or momentum was pretty poor throughout this time. They did manage to get back to the 60 line. They're bumping up against the 60 line, but can't seem to get momentum any higher than that. The PPO is positive, and with the exception of about 3 weeks there, 1 week there, and a couple of weeks there, the money flow has been negative. So the accumulation is also at a 1-year low. This one has some work to do.
It certainly does. And, I think the business, they're kind of handling their part. The business is growing, it's profitable. So the joint stock company is doing what they're supposed to be doing. It is a discounted stock, but there is such a thing as, it's a better valuation. It's kind of like Warren Buffett. One of his strengths is his patience, right? He'll buy into a stock and sit on it. And I would say Warren Buffett probably has more patience than I do, because it's like, wait, I've bought into PayPal, similar joint stock, and it's just not doing anything. So I guess I got into it too early. So I'm going to wait for the market to tell me when these payment companies are worth investing in. Then my capital isn't just sitting around, accumulating dust, not making any money. In fact, even losing some money. So this one here is right now, the market's got to show me that these payment companies are worth buying. So that's the analysis on joint stock. It's good to compare against other stocks in the same industry, peers, because you could kind of realize that the market just doesn't want payment companies, doesn't want PayPal, doesn't want Block, doesn't want joint stock. And that's that. So, hey, the market's not buying it. Let's not fight it. Let's not fight the market. ADI, analog devices, 27% performance over the 1 year. This looks pretty darn good. It's up 90%. Now, it's not like NVIDIA is like, it's gone up just crazy amounts in the 5-year. This one's $135 billion market cap. Its forward P looks reasonable if they're growing at 27.87. And I just think it's fairly priced. Looking at the rear view mirror, the company's done well. They just closed this year. Their fiscal year ends at the end of November. And the growth was good. Growth was good. Now, where do these guys function within the whole ecosystem of semiconductor and micro devices? So unlocking physical intelligence, huh? And then we got car technology, consumer tech, Oculus. Okay. So their devices are going into other products. Okay. All right. Okay. So they're not in the data center, which means they're not going to boom like Broadcom and NVIDIA. They are growing nicely. That looks like a good growth number. They had a contraction year the year prior. Let's look at their profitability. These guys super profitable. They're profitable, not super profitable like NVIDIA, but they are profitable. The margins look good. Profit margin to 20.57 looks good. Free cash flow looks real good. So that looks good. What's the forecast? Are they going to keep growing? Are they going to flourish going down the road here? So the growth, we just finished this year. And it looks like growth for the next year, which is going to be fiscal year 2026, 19.38. Very good. And then it's going to slow down a bit, but it's still going to be green. Okay. And their profits are expanding faster than that top line growth, much faster in this fiscal year, bringing down their PE ratio into the 20s. And if I analyze this company, I think I'm probably going to land somewhere near fair value on earnings per share. When I look at their free cash flow rate, and we'll look at their balance sheet as well. Balance sheet, they've got some debt, $5.3 billion. Debt to EBITDA 1.78. So these guys have like a B, like using the grade school analogy. A B is a passing grade, and they do have decent margins where they can pay off debt. The free cash flow is $4.28 billion of free cash over the last trailing 12 months. And this type of business, I would say it's worth and we have some debt involved. So it'd be worth $9 to $14 billion in value. And I would say 90 to $140 billion in value. So I think they're either fairly priced or priced too high. And in either case, I've got better options. NVIDIA is discounted right now, small discount. Qualcomm's discounted. And there's just some options within semiconductor that I'd rather invest in. I don't know that I have a valuation. Let me take a quick peek. I don't think I have ADI in there. And I don't know that I need to add it because I'm not seeing really good numbers. But let me kick it over to you, Daryl. What are you seeing on ADI?
So they did see a bit of a breakout in early December after pretty much trading sideways for, I would say, most of the year. They are trading above an upward sloping 21-day, 50-day, and 200-day moving average. They are consolidating for the past week and a half, but notice the volume is very, very low this past week, and even today it's very low, although we still have several hours of trading left. I don't expect it to be probably around, I expect it to be around these numbers, not anywhere close to the average. The RSI is sitting right around 60. The PPO is in positive territory. We did have a bearish crossover in bullish territory. The money flow has gone from positive to neutral. So after this run, it is pretty much just trading sideways for the moment.
Okay. All right. So we'll move on. We're going to talk a little steel. We're going to talk about BHP, and we're going to talk about, I think, Shadow Guy wanted to kind of follow a thread around steel. And Nucor produces steel here domestically in the U.S. It's done quite well, really well over the 5-year. This producer, which Shadow Guy put down, is a big producer in China. And this one hasn't done all that great. Now, it could be that, for a while, you see how Chinese stocks sold off. They kind of sold off, and it took a while for them to start to work. This one did start to work, but then it faded. And part of it is that their revenue growth isn't there. Looking at the rearview mirror, it's like, hey, they didn't grow. So yeah, no surprise, the stock didn't do much. So if they can't grow, their stock isn't going to do much. Now, another producer that I think is connected to Asia is BHP Group, headquartered in Australia. And they produce steel, copper, and a bunch of other things. And these guys are not growing all that great, but their stock has been performing well. Year to date, 23.8%, and you get paid a nice dividend. This company is in Australia, so they announce semi-annual, twice a year. And looking at the rearview mirror, these guys have been growing quite well. Not growing well. 7.9% contraction in their revenue. And that's because probably the commodity prices haven't been all that great. When we look at a forecast for their business, analysts think it's priced too high. And the year we're operating in is this year here. They're supposed to grow a little bit, but their profits are really going to expand. That looks good. And then next year, the year that follows, is they're going to contract a bit. Profits going to contract a bit. But that's all because of the commodity forecast. The commodity prices could actually be different a year from now, and this could change quite a bit. So this one here, I'm curious to see what the charts are looking like for you. Let's take a look at that first. I'll kick it over to you, and then we'll come back to Nucor, excuse me.
Okay, we are trading at they're pretty much their highs. If I look back over 20 years, we are looking at highs here. So I'm just going to go back down to 5 years because this will be the fourth time that they are testing these highs. They were actually a little bit above it. At 62 was the high. So they're a couple dollars shy of this high. And they're trading right at this two other peaks that I'm seeing there. So the big question is, can they break above this? I don't know. They've proven to me 4 times or 3 times before that they cannot. So let's step down to 1 year. And they are trading, today they're trading below their 5-day. They are trading above a 21-day that's rising, a 50 and 200 that is also rising. This one was trading under its 200-day. It's trading well above it now, so it looks to be about 16% above its 200-day. The RSI got up to 70 and is drifting down pretty quickly. Today it's more like 60. PPO is in bullish territory, traveling pretty much sideways at the moment. Accumulation does look really good and the money flow is positive. So the one question they would have to answer for me is can they break out above these higher prices? Because for the last 3 years, they have not been able to do that.
And the stock's down more than 2% as I speak. So
Yep.
It's not going to happen today.
Nope.
Yeah. Thanks, Daryl. That's really interesting.
Okay.
All right. So let me come back, and now we're going to talk about Nucor. And Nucor really benefited from, a real push for the U.S., the current administration, to really have local sources of steel and have those jobs and so forth, and have the mining jobs, the mill jobs, and so forth. So we know what that's about. These guys pay a small dividend, and I have looked at Nucor in the past, and I think I have a valuation for them. So this stock's really done well. Looking at their performance, just from an operation standpoint, small growth on the top line, but it had 2 contracting years, which is kind of, this stock has kind of defied gravity. The business has contracted and the stock price has gone up. Well, how does that happen? But it happened. Look at that. And when we look at they don't have free cash flow in trading 12 months. And you see the cash flow. They grew it in 21, grew it in 22. That looked really fantastic. And then they started to contract, and then it really contracted. Well, that's a concern for me. What's happening to your cash? Where's all that cash going? Margins contracted. Well, that's a problem. So this one here is a sick puppy, and the market may not care, but I think it's a sick puppy. The market doesn't think it's a sick puppy. It's going to buy it from the pet shop, take it home, and try to have it for a long time. Now, this, according to analysts, this stock is discounted by a tiny bit. Their forecast is saying they're going to start growing. In fact, they're going to grow this year, next year. Let's look at the quarterly really quick. So the quarterly growth was good in Q3. We don't know what's going to happen in Q4. So I think things are turning around in the steel complex. Okay. So this is one of my an area in stock analysis that I really concentrate on, because what stock analysis does do well is it aggregates all these analyst predictions, forecasts, and brings it to one place. And I like that. You can look at it by quarter or by annual. But you see how I'm trying to answer, why does the market really like this stock? What's seeing this growth? And I have to agree, that is a positive forecast. So that's looking good. So this one here is looking good, but it is probably going to be too expensive for me. But let me kick it over to Daryl. Let me double check my valuation while he looks at the charts on Nucor.
Well, I see that they've had a high of around 200, and that was in 2024. They got down to 98 during the tariff tantrum era. And I think 111 is probably pretty solid support. What I'm seeing is from here to 190 and from here to the 200, which they've tested numerous times, is about a 50-50 split. So you have a coin toss on whether you're going to make it to here or be back down to there. Call it heads or tails. What do you want?
I don't know. I think Nucor is too expensive. It doesn't drive any cash right now, and it's in an industry that doesn't create a lot of profits. So I think the stock's bid up too high. All right, so that was Nucor. And the steel industry, you got to get in and get out at the right times. If you time it right, you can make some money. But I'm not liking Nucor. I don't think BHP is ready, or I'm not ready for BHP. And that's a quick run through the steel industry. We're going to move into Amazon and Mercado Libre. Now, Tomas wanted to know, or I think his question, let me revisit his question to make sure I get it right. And then Ricardo also wanted to look at Amazon, so we can kill two birds with one stone. Where is Tomas? Oh. So rotate from Amazon to Mercado Libre. Okay, high level, Mercado Libre is growing faster. It's more focused. Mercado Libre is higher risk, but could be higher appreciation, better return. Amazon has a fantastic future. Like 2026, Amazon may be the best mega cap performer in 2026. I think it's really set up to be a really, really good company, really good stock. Mercado Libre is doing great. Performance is great. I like them both. I own them both. But let's compare the two. Let's put them head to head. See which one, if you only had the option of buying one, or maybe you're an investor that really likes to concentrate positions and say, I don't want to own two e-commerce companies, just one. Okay. Let's try to help that investor make that evaluation. So Amazon has not been a great performing stock. It's only up nearly 4%. Today, it's not under much pressure, and it's on a down day. 5-year, it hasn't also been kind of an awesome stock. But overall, I don't think anybody's going to argue that this has been an awesome stock for long-term stockholders. And frankly, they are a very powerful company. Their e-commerce business is second to none, getting bigger, getting stronger, disrupting more. Their cloud infrastructure business is the biggest. It's the most valuable. It's strategic. It's all those things you want. And they have a bunch of other businesses that are really fantastic, like their video streaming business. They even have a robo taxi business. They have all kinds of neat businesses. They're also owners in which one? Anthropic, the AI company. So it's like, geez, you guys have your hands in a lot of interesting businesses. So this is a nice, in my opinion, premium company. I think in 5 years, Amazon's going to be much bigger, much more powerful, and all those good things. Now they do carry a high forward PE, 31%, 31, excuse me. Analysts do think there's a discount out there. Now, the fundamentals on both these companies, Amazon and Mercado Libre, just phenomenal. These guys, this is a massive business, almost 700 billion in annual revenue. And they're growing it by 11.48. That's basically $70 billion of revenue added to that top line. 70 billion is a big size corporation in the US. That's a big company. And these guys are like growing by that rate each year. That's phenomenal, incredible. And their numbers are so big. Free cash flow, it's there, but they've been using a lot of their cash flow to grow that data center and take advantage of businesses wanting to do more, take more workloads to the cloud, and also just start innovating in the cloud, either creating AI or other types of systems. So Amazon's, they will admit that they don't care of their stock price. What they care is they want to be better. They want to be obsessed with the customer, and they want to build the strongest business, period, that over long periods of time will show that it was the right strategy for the business. So I respect that. And investing in Amazon, you have to qualitatively understand that, because you can't purely look at the numbers, but Amazon has the credibility to be able to do that. I mean, they've been doing it for a long time. They've been dominant for so long. And what they're saying is it's not good enough that we're this big and successful. We want to get bigger and more successful, and it's going to take some shorter term investments, and you have to sacrifice your performance in order to wake up 5 years from now and be, I don't know, 2 trillion in revenue. It's like, oh my God. And that is a possibility. They're going to be a $1 trillion revenue company pretty soon. And they're growing that fast. Their gross profits for an entity that big. And I'm going to show, I could also show Alibaba, but I'm going to show Walmart. I don't like Walmart. I'll just put it out there. And I just think their stock's priced too high. They're about the same size as Amazon. And they are growing, but they're growing smaller portions. Look at their gross margin, less than 25%. Okay. And when we go to Amazon, 50%. So they're about the same size, but Amazon gross margin double what Walmart's about. Profitable. Okay. So that's looking good. So Amazon to me is one of my big bets. I think Amazon at the end of 2026 is going to be higher by 15 to 50%. It's a broad range, but in general, it's going to be higher. And Amazon to me feels like, looks like, smells like Google roughly 9 months ago, 10 months ago. The market didn't quite understand what the heck they were looking at. I thought the market was kind of blind to great value, great potential, and Google ended up just outperforming all the mega caps. I think Amazon's the same situation. I think it's going to outperform the mega caps over the 2026 year and probably collectively the next 2 years. That's how bullish I am. I am a big fan and investor of Mercado Libre. What is impressive about this company is they're much smaller than Amazon. They're tiny compared to Amazon. They're like Amazon's 25 times bigger from a market cap perspective. They carry a higher forward PE because they're growing. Analysts think they're discounted. Now, this stock has not been a total winner, 18.5%. That's good, but it's not great. And you can see this real big sell-off here. So I think that is creating an opportunity. Now, it's either showing us a big opportunity or making us do our research, make sure we're not missing something, right? But let's take a look. Very good growth, 37%. Hello, 37%. And this is a pretty good sized business. This is in US dollars, $26 billion company. And again, Amazon's growing at like close to $70 billion per year. So they grow by 2 Mercado Libres a year. Every year they can like, hey, we do e-commerce growth. And anyway, you get the point. All right, so let's take a look at margins and profits of Mercado Libre. Gross margin is 50%, right there with Amazon. Okay, and they are profitable, and they do turn some good cash. Look at that cash flow, sweet cash, 33%. Beautiful. It's a beautiful looking number. There's no other word for it. So analysts are high on Mercado Libre. They believe collectively pretty good analysis out there. And they're going to keep growing. This year, we're going to grow at 40, 28, 21, 18. As you get bigger, this growth rate gets harder to keep your percentage growth rate. And their PE ratio is going to drop to 23 over the course of the next 2 years. So the investors are paying for that growth. So overall, I'm a buyer of both Mercado Libre and Amazon. They're both discounted in my book. Let's say, now I know Tomas, he's a younger investor. So I'm going to pretend I'm a young investor, and I'm going to pretend I'm not going to pretend I'm an old investor. I am an old investor. So young investor, where are you going to make potentially the highest rate of appreciation? I think Mercado Libre can deliver phenomenal appreciation over the next 5 years. This thing, over the last 5 years, it hasn't done all that great, but you really need to measure from here to here. And if you did, this is a 300%er. Okay, this is a triple bagger or quadruple bagger. This past year, I think, offers a nice opportunity. And if you got to study the Latin American economy just to make sure you're not stepping into a problem. And I don't know that, like, if I look at the economies, and I'm not an expert, but I read enough to know the Mexican economy is doing well. That's probably the best economy that I'm familiar with, or I should say I have the best current information on Mexico. I don't know too much about Brazil, but I haven't heard many problems. I don't know much about Argentina. But I do know Mexico's economy is doing quite well. So Mercado Libre it's higher risk, but it could deliver higher performance. To any investor, but especially older investors, you want something that's going to grow, something that's solid, kind of like a good solid oak tree. It's already big. It's already like majestic. It's strong. You want to come back 10 years from now and see that oak tree. It's just a little bit bigger. And it's just as strong. Amazon. This company is going to be, so the companies that I think are going to rule the exchange in the future, Amazon, Google, Meta, Microsoft, but I think Microsoft's going to lose some of its mojo because they're more of a legacy based company. I don't think Apple's going to be there because they're a single product company that I think continues to struggle to grow. But I think Amazon and Google, especially, those are just like, those are companies that are dominating. They're big, they're growing, they're just phenomenal companies. So I have a big stake in Amazon and I have a small position in Mercado Libre. I'm 57. I have an appetite for risk, but I like smart risk. I like risk where I'm like, hey, I see the, I understand what the business plan is for Amazon and Mercado Libre, but I understand it better for Amazon. So I'd rather bet more chips, more capital on Amazon looking forward. So to rotate from Amazon into Mercado Libre, I can understand that. But I just kind of went through some research. Hopefully, Tomas and hopefully, um, Ricardo, you find the analysis interesting. I'm going to show both evaluations. Then I'm going to kick it over to Daryl. Amazon discounted by 29%. This is my forecast. This is in the shared repository that you have access to, Tomas and Ricardo. You could access this 24/7. And let's take a look at Mercado Libre. Again, I like them both. They're just different, right? So notice that the discount on Mercado Libre is higher than Amazon, but the risk is higher. Okay. So we could wake up 5 years from now and Mercado Libre dealt with some disruptions, some surprises, or it could be you outperformed Amazon in a big way. Welcome to stock investing. Higher risk, higher reward. Over to you, sir. What do you think of these two awesome businesses?
Well, we'll look at the charts here in just a moment, but when you mentioned what Amazon owns, I found this graphic
Jeez.
a couple of weeks ago. This is only part of it, so we'll just start at the top, and you can look at what they own. This is their media and entertainment. This is their e-commerce. They're into pharmacy and healthcare, grocery and retail. I have a Ring camera, two of them, one in my backyard and one in the front yard. We have an Alexa in our living room. I use Amazon AWS. I have some applications deployed there. I'm also written a book. I'll show you that here in just a second and do a little commercial there.
Nice.
So, Amazon provided all the tools to do that. So I'm a huge fan of Amazon. It's just amazing what they have their tentacles into. And then, like I said, in 2013, I had a story to tell and, used Amazon publishing to write my book, format it, publish it, and it's been selling there for it'll be 13 years next March.
All right, Daryl, this is awesome.
Yeah. So anyway, Amazon has been one of the favorite companies and they're here every other day at least delivering. We live in a rural
Pretty soon they're going to be there every hour.
Yeah. We live in a rural area. So big stores are at least 10 miles away and bigger stores are 45 miles away. So we use Amazon a lot because they are by here every single day up and down the street. So let's take a big picture view at Amazon. This is 20 years. This pretty much has me sold. As long as they're staying in this trend channel, I'm pretty much good to go. Just keep buying it and let it do its thing. So that's one. And then we'll look at Amazon in a 5-year. So we have this one auto resistance line that is tested a few times to the upside and also has acted as support. It is trading above that right now. We did reach a high in January, and it's come up and tested that twice, broke out, trading a little bit below it. Let's go to 1 year. And I covered this in my video yesterday as well with a little bit more information, but we have this shorter term uptrend line that was at the tariff announcement lows, and it's been tested, 2 or 3 times. It's trying to get above it right now. So to me, it looks like it's probably in a pretty good buy zone just to keep collecting this one. The RSI is above 50. The PPO just crossed into bullish territory 2 days ago. Accumulation had dropped off, and it's starting to build a little bit more, although the money flow is currently negative at the moment. And then I want to point out these reversal patterns. Just keep an eye on these kind of patterns, because when you see them, you can almost be guaranteed you're going to see a pullback. So be careful not to be buying into these areas when you're starting to see these candles. It's a time to be trimming, not buying. So anyway, I like Amazon a lot. Let's go look at because I can't say Macabro Libre as good as
Yeah, it sounded good to me.
Yeah, my buddy. So I call it Melly. Let's see. Do I have it here? Yes, I do. So they're also they have an uptrend line that they have broke down below, and the 200-day is rolled over. The 50-day is trending downward at the moment. The RSI is below 50 in this case, and the PPO is negative.
So when
Money
it breaks
flow is
below
also
the trend line
negative.
like that, what are the concerns, or is there concerns that kind of go through your head?
Not on a short term this long.
Mhm.
This is a very short term trend. So a breakdown like this, raises a yellow flag but not a red flag.
Mhm.
And let me show you one that does raise a red flag.
Nike. Oh,
Yep, this one raised a red flag. When you have this much data, so we're talking clear back to 2008 and 9. When you have that much data and it breaks down below a trend line, this is throwing up multiple red flags.
got it. Yeah, and
But
that I have to agree that Nike's business model is broken. It's like something is structurally broken with the business, not
yeah,
technical. The
yeah,
business is really in trouble.
yeah. So on a short term, like Melly's in right at the moment, it's a yellow flag, not necessarily a red flag, but it does tell me to be cautionary.
Mhm. All right. So that's where we're at, and kind of, what I was saying about Mercado Libre is higher risk, higher reward, because it could pop back up. And next thing you know, you're sitting on a real nice winner, just eyes wide open. And I like the stock chart. When you see a stock, under pressure like that, it's time to do homework. It's time to research. It's trying to make sure I viewed it accurately. Did I miss something? And I don't feel like I missed anything on Mercado Libre. I don't think I missed anything on Amazon, but it's just the market's way of telling me go double check everything, and I did.
I want
Just
to
to
put
own
an
it.
exclamation point on that. That is really good advice.
Yep.
Just because they drop down below this trend line, this is market investor reaction. Do what Victor said. If it happens and you get worried, go research the company. Did anything change in the thesis of that company? And that's really important, not to be I may do some trimming, but I don't own this one.
Mhm.
But if I did, I would have been trimming maybe when this happened, just slightly. But I wouldn't have been selling out, jumping out until I did my research. If I found anything that said this company is making some wrong decisions, then I would consider selling out, but not jumping completely out just because the market is reacting poorly, in a 2 or 3, 4 month time frame. So I want to put an exclamation point on what you said, Victor.
Thank you. Perfect. So let's keep rolling. We've got a new member on the channel. Jamie, thanks so much for becoming a member. I appreciate it. And please let me know if there's a stock you'd like me to look at, or you can, if you can email me, I'd appreciate it so I can get you all hooked up with all your perks. I'm going to put my email in the chat, and you can email me like, hey, ahead of a stream, can you take a look at this particular stock and so forth? And I could take a look at that stock. But I appreciate you joining the channel, and my email is now in the chat. Email me. Just let me know what your email address is, then I can get you all the perks that come your way. Thank you, sir. All right. So I think I forgot who brought it up. Somebody brought up Target. It's one of the latest and greatest stocks, and I'm thinking this one may work. Now, here's what I'm seeing is this stock has been beat up. It has been thrown away, not even with last week's garbage. They were thrown away with last year's garbage. Just, this is an undesirable stock and so forth and so on. Now, some of this is deserved. They made some business decisions that I think put the business in the wrong place. They were losing revenue. They were at one time a darling to the stock market. Oh man, Target, they got the right, catalog. People don't go to Walmart, and it kind of, Target seemed to have the right product. It wasn't overly expensive, but it was a better product, better assortment, and so forth. And they were cleaning Walmart's clock. But then they made a series of bad decisions, and revenue has been declining. So the stock's been under pressure. $44 billion market cap. Our friends over at Walmart are near $1 billion in market cap. P ratio looks pretty sensible at 12.88. 4.63%. Who needs a bond when you can get 4.63% dividend from a stock, especially one that has been under pressure for a while? But is this pressure telling me that, hey, you are buying a problem? Well, I don't think I am. Now, if I look at the rearview mirror, I see the scars of making bad decisions. You have a contracting business, okay? But I need to invest by looking through the windshield. And these guys here, let me just take a look at profitability before I move into the forecast. The gross margins, a little bit better than Walmart. Profitable, free cash flow generating. Okay. Now, when I look out that windshield and say, well, what's ahead for this Target business? Hey, I see some green on the screen. And these are big businesses, so they're not going to grow like gigantic portions. And when I look at the quarterly forecast, I'm seeing that, hey, we're going to start seeing some green on the screen. And if this company, Target, starts putting up, hey, we're growing at 3, 4, 5%, the market's going to look down and go, and they pay a 4.5% dividend, and they're making money, and they're growing their profits way faster than their revenue growth. I really like what I'm seeing here. So Target is a stock that I've been buying into and accelerating my buying because I think this one's going to be an under the radar stock that I'm going to wake up at the end of 26 and it's going to be up 10 to 30%. And I'm going to be paid this dividend. So that's been my research there. When I look at the stock's value, and I look at its cash flows and I look at its profitability, 27% discount. And I'm using a higher discount rate than a high quality company. Balance sheet's fine, but they've had their struggles. So it's like, hey, got to use a higher discount rate. So I get a higher rate of return. So Target's looking good for me. What are you seeing on the charts, Daryl?
Yeah, they are starting to make some noticeable changes here, a shift in the chart characterization. So this is looking over 5 years. They've been fighting this downtrend since the end of 2022. They've tested this downtrend line a few times, and we have a much shorter downtrend that's connected to this point and to this point and to that point, which they finally have broken above. So let me just step down into 1 year. And they've also sustained a move above the 200-day. So that is positive news to me that they can maintain this above the 200. It did come down and test it. So it came down to test the support, and buyers stepped in at that 200-day and moved the price higher. The 200-day looks like it's still decreasing, but I would suspect in the next week or so that you're going to see an increasing 200-day. If that happens, that's more positive news. The next resistance point, in my opinion, there's a gap down there at around 114, and then you're getting to this. So yeah, I do see a pretty clear path back to this downtrend line. So probably $22 or $23 from here. They haven't been overbought in the past year. Last time they were overbought was in 2024. So they come up and test, break above the 60 line. They don't quite get to the 70 line. They did here 1 day. And it looks like here maybe 1 or 2 days. PPO is positive. They had a bullish crossover in bearish territory, and then it moved into bullish territory, came down and tested the shorter term average, and is now starting to move back more positive. So that is good news. Accumulation is still so-so. Money flow is currently positive, but it's moving back towards neutral. So I'm starting to see a shift in sentiment on Target based on the chart.
Excellent. All right. Thank you, Daryl. All right, guys. So I think that's a good place to end our stream. But before I do that, what's going on with your channel this week, Daryl?
So I did post a video yesterday. This is a QR code to my channel if anybody's interested and doesn't have that already. But yesterday I did, oops, I don't want to cover that up if you're going to use it. Wow, I didn't want that, man. Okay, let's do this again. There we go. So I did publish this video yesterday. I reviewed about 14 different charts, Amazon and GMAB being 2 of them. I covered at least 12 more charts and the decisions that I'm making based on those charts, and also talked about a lot of price targets for those 14 charts that I have. So that one is published, and then this morning before I got on the stream, 4 hours before I got on the stream, I was researching a lot of information about Citigroup, because I will be publishing a video on them here in the next day or so.
Excellent. Thanks for doing that. All right, perfect. So we will be streaming again on Wednesday, the last trading day of the year. So join us if you'd like. Same time. We'll go over the same format. Hopefully, we see you on that stream as well. If you haven't done so already, get your pick in for 2026. Which stock is going to perform the best based on a percentage increase? Join the fun. We'll use that as kind of a good place to point out some stocks that are really flourishing, and be sure to get your pick in. With that, everybody, good luck with your trades this week. The market's still under a little bit of pressure. Might be a good day to look at some stocks that you were thinking of buying. I know I'm going to be doing that. And good luck with those trades. And thanks so much for joining us. Really appreciate it. Everybody have a terrific day, and we will talk with you soon.
Take care, everyone.